The popular markets are, I can generally list them, the 10 most popular markets for London Capital Group. I'm not sure what they are for the others, but I understand they're pretty much the same. But for London Capital Group, they were the FTSE, the DAX, the Dow, the S&P, and the currencies. It's sterling, euro, yen, and euro sterling, and gold and oil for the commodities. And those 10 markets take up about 84%, 82 to 84% of all the trades. So although they quote 2,500, 3,000 markets, 84% of it is in just 10. So it's, that's where the spread betting companies like to concentrate their efforts, those markets. The reason why they're so popular is because they're very liquid, so that clients can get trades away. They're very liquid, so that the spread betting companies can quote very, very tight prices on them. And there's always, not always, but generally some movement in them. So there's a bit of excitement in the markets. And that makes them attractive to the clients. And of course, they've all heard about them. It's very difficult to trade in something you've never heard of. Coffee futures they sound exciting, but nobody really has a clue about them at all unless you're actually in that market. So, but everybody's heard of the euro.
What's the most obscure market you've ever come across?
From the retail client point of view, probably the interest rate futures are the ones that they do least in. Although, the actual industry, the financial services industry in the city, they are probably one of the biggest markets. For the retail clients, they're just non-existent. So I'm talking the 3-month LIBOR rate in a year's time, people trading that. The retail clients just aren't interested. When it comes to stocks, yeah, some of the weird and wonderful AIM listed stocks that I've never heard of. But to be honest, there's some FTSE 100 companies I've never heard of. So it's not surprising that the AIMs are struggling at the moment. I see some of the spread betting companies and CFD companies are quoting bitcoins, which is a new market. Not favourable to everybody, but it's definitely a volatile market, and so they're getting quite a lot of interest in that.
Thank you. You okay?
Yeah.
Good. Did you think most spread traders day trade, swing trade, or position trade?
Definitely day trade. The vast majority day trade. The vast majority of positions are held for less than 5 minutes. Once somebody's decided a long-term position, then they can hold it for months and months and months. But in general, clients trade about 82 times. And I'm being specific because I do actually know the numbers. 82 times, an average client will trade 82 times a month and will hold the position for less than 5 minutes. And that's pretty much what they want to do because it's exciting stuff. You make money, you lose money. That's the name of the game.
What would you say to someone who said that spread betting isn't trading the real market, that it's a sort of a made-up market?
I would completely deny that. It's just as real as any other market. You go into the foreign exchange, the spot forex market. Are you actually trading foreign exchange? No, you're not. You're just trading the difference between two numbers. You don't expect to actually take yen in. You don't want to sell your sterling and buy and get yen and get that deposited in a yen bank account. You're buying the sterling yen and then you're going to sell it again in a few minutes' time. Shares, fine, you're buying an asset in the company, but it makes no difference. If you buy a spread bet share, it's exactly the same as buying the real thing, except it's a bit cheaper doing it for a spread bet because you don't have to pay stamp duty.